Hey everyone, Jamie here. Welcome back to my channel. Since I'm going to be on vacation this week and won't be able to update the challenge fund, I thought this would be a good week to show you what's in each of these portfolios and talk a little bit more about each of them. But first, if you're new to my channel, I do a weekly episode pitting 4 different investment strategies against each other to see how they do. I do this with full transparency, good or bad, and then each week I deposit $100 into each portfolio to just dollar cost average into each one of these funds to see how they do. So if you're thinking about investing, you have some ideas on how to invest your money. But before we get started, I have a quick word for my dog, Timber.
Hey, do my owner a favor and smash that like button and subscribe to his channel. Go ahead, I'll wait. Did you do it? Much appreciated.
Before we take a deep dive into each one of these portfolios, I first just wanted to go over M1 Finance and kind of how it works. So if you're thinking about investing, M1 Finance is a great app for beginners to use to learn how to start investing. So first off, when you open up your account, it'll ask you to create a pie. And that's what each one of these 4 different pies are. And then as you'll see in the pie, I have different stocks. And then you weight each of these stocks, how much money you want to put into each of them. So as you deposit, once I deposited the first $500, I just had it going between 10% into each one of these. So it evenly distributed $50 into each one of these accounts. And then the part that I think is great about M1 Finance is when you buy, so I'm going to go ahead and buy the $100 for this week on this. So when I buy it, I'm going to put $100 in, confirm it. What it does is it puts, for example, Dollar Tree is overweight right now. It's at 10.3% where I wanted it to be at 10%. Where Verizon's at 9.2% and I want it to be 10%. So it puts a little bit of money into each one to make them even. And that's what I think is great about M1 Finance. They make it really easy to invest, and you can also turn on auto invest, and you can just say I want $100 a week to just go into my portfolio, and it will automatically deposit it in to your underweighted stocks. So if you're thinking about investing right now, there is a link in the description. It's a referral link that will give you $50 if you deposit $100 in. It'll give you a free $50 as well as it'll give me $50. So that'd be a good way to be able to support my channel. Down the road, I'll do a full in-depth review of M1 Finance because it isn't for everybody. But I think for a beginner, it's a great starting brokerage app to use. So that being said, let's get into the first portfolio. First fund we're going to look at today is Graham Stephan's fund. Watching his videos, he talks a lot about investing into the S&P 500 as an ETF. Also the total stock market, he invests in that ETF. And then he also mentioned he's recently just started investing into an international ETF fund. He hasn't really mentioned the QQQ or this other one that I put in, a small cap fund, but I wanted to give him a little bit more diversity. So I pretty much broke it out at 50% of his portfolio is going to the S&P 500, 20% is going to this total stock market, and then 10% is going into the QQQ, Total International, and the small cap ETF. Now let's kind of take a look at each one of these performance over a historical period. As you can see here on the VOO, which is the S&P 500 ETF, in the last 1 year it's had a 16.21% return. The average return in the last 3 years has been 18%. The last 5 years it's been 15%. And the last 10 years it's been 14.5%. So this is a great fund to invest in that's done well over the last 10 years. The next ETF we're going to look at in Graham's fund is the VTI, which is the whole total stock market index fund. So here you'll see in the last 1 year it's returned 11.8%. Last 3 years it's returned 17.4%. Last 5 years 14.6%. And last 10 years 14.2%. So another great return history on this ETF. The next one we're going to look at is the VXUS ETF fund. That is the international ETF fund. So this one hasn't done as well the last year. It only returned a 0.33%. Last 2 years, it's been 8.24%. Last 5 years, 7.47%. And last 10 years, 5.75%. So this just gives them some diversity, but this one has not had the best returns in the last 10 years. The next one we're going to look at is the VB ETF, which is the Vanguard Small Cap ETF. Let's look at its returns. Last 1 year, it's been 0.71%. Last 3 years has been 12.24%. Last 5 years has been 10.95%. And last 10 years has been 12.19%. So this just gives them some more diversity, and that's why I picked those 5 funds for this portfolio. Now let's take a deeper dive into Joseph Carlson's fund. So Joseph Carlson's another YouTuber that posts a weekly series on YouTube on how his passive income fund does. He mainly focuses on good companies that pay dividends and continue to raise their dividends and raise their yields to their investors. So in his fund, he has BlackRock Science and Technology, this is like an income fund that just mainly focuses on science and technology companies, and he pays about a 7% dividend yield. Next, he has Apple and Microsoft, which he has heavy in his portfolio, which are just two of the best companies in the world that pay dividends and continue to raise their dividends they pay out to their shareholders. Next, he has Costco, which is one of the biggest retailers in the world. And then he also has Home Depot, which is another one like Starbucks, as well as Disney, which is into the theme parks, movies, and now they're also doing streaming as well. Next, he has Starbucks, which is on the restaurant front. This is a new add to his portfolio, but this is one that he feels will continually do better and pay more dividends over time. Then he has a banking company, which is JP Morgan Chase, which is one of the best banking companies in the world. And again, they just continually pay dividends, as well as Vici Properties and Simon Group. He recently just sold out of his Simon Property Group, so I'm thinking of selling that as well and just making Vici higher, because that's mainly what he's focusing on for his real estate part of his dividend portfolio. If you want to find out more details about his portfolio, I have a link to his channel in the description. Next, we're going to talk about Jeremy with financial education. In Jeremy's portfolio, most of these companies that I have in here are on his public traded account that he shows in certain videos. The ones in this portfolio he talks a lot about almost weekly on his channel are Corsair Gaming, Tattooed Chef, Oatly, Honest, PayPal, and Facebook. Some of these other ones were just in his public account, so I added them in. I was going to add in Planet 13, which he talks a lot about as well, but that's one drawback on M1 Finance. They don't let you trade a lot of those smaller stocks. Most of these stocks are more on the high risk, high reward strategy, and that's why I included it in this challenge fund, because I think it'd be a good thing to look at, because when the market goes down, these tend to take the biggest hits, but when the market goes up, these tend to be the ones that go up the fastest. So it's fun to just see that type of strategy in this challenge fund as well. So finally, let's take a look at my fund that I created for myself, which is more just recession-proof stocks. So when I looked at a fourth option, I figured it'd be good to maybe do recession-proof stocks. So first thing I did, I just Googled best recession businesses. And it came up, we have grocery and food stores, accounting and tax services, financial advisors, information technology, telecommunications, healthcare services and providers, and auto maintenance and utility services. I also Googled best recession-proof stocks before I came up with what I wanted to put in my portfolio. And these are the ones that did well in 2008 and 2020. So we had Netflix, Target, Lowe's, Walmart, Abbott Laboratories, Nextra Energy, and Home Depot. So here's what I included in my portfolio. I went ahead and put Dollar Tree, which tends to do well in recessions because it's a low-cost goods store. I included Budweiser, which is Anheuser-Busch, because people tend to still buy alcohol during recessions. I included Lowe's because Joseph Carlson already had Home Depot in his, so I didn't want to have them intermix. I'd included 3M and Walmart. Walmart's another low-cost, grocery store, goods store. Johnson & Johnson's kind of does some of the healthcare stuff. I did Waste Management because everybody still needs their trash removed. I did O'Reilly Auto Parts because people tend to start fixing up their cars more than buying new cars in a recession. Kroger's one of the biggest grocery store chains. And then I included Verizon for the telecommunications. So as you can see, we have 4 totally different strategies going into 2022. And again, that's where each week I'm going to show full transparency, good or bad, showing how each one of these funds does for the week. I wanted to do this weekly series because if you're thinking about investing, I wanted to give you 4 options to look at on how to invest your money. Now, none of these might be the best way, but at least you can kind of see how 4 different strategies work and how they perform each week, so you can make a better decision on your investments. Thanks so much for watching. And again, sorry I can't do my weekly update this week as I'm on vacation, but be sure to check me out at the end of the month for a video updating how each of these did for the week and also how they perform for the whole month. So have a great day and thanks for watching.